Hello, and welcome to Crypto Analysis in the Morning with me, Malachi Kelly, professional trader for over 10 years now. I'm going to start this video like I start every video with my disclaimer. I am not a financial advisor. This is not financial advice. This is just the thoughts that are in my head and the way that I see the market. So let's jump right in. So yesterday was an okay day. We had a trade on the Euro USD and we were up $100, but the market subsequently reversed and stopped us out. So unfortunately, we only made a small profit yesterday of about $20 because the market moved against us. We'll see if there's an opportune time to trade. I mean, just briefly, we've seen the US dollar hit the $94 a mark, so the market is going down. So we'll see that we had the P&L 344, 344, 0. So actually it was $7 ish made yesterday as the market stopped me out. But we'll see if we can get a trade on today. We'll quickly jump into the forex market. Sorry, not the forex, the crypto market. So we'll have a look at what cryptos are saying today. We're seeing a red day across the chart at the moment. Bitcoin down 1.35%. We'll have a look at the chart. So we saw a low of 5,873, and then subsequently market get bought back up to 6,500. 6,500 is the price of Bitcoin. But again, we're seeing this range between 6,700 and 5,800, where potentially there was a double bottom here and then a subsequent uptrend. We do need to see price break through this level before we start getting excited, and then again past 8,100 before we're going to start seeing some positive gains in this market. We may see this just move inside this range and price come back down to this level again, but I'm more inclined to see a break of this resistance level. Overall, our investment has got better. I think we were minus 1,800 yesterday, now only minus 300. Oh, sorry, not yesterday, beginning of the week. Now we're minus 300. So we've seen some good returns from our crypto investment over the last couple of days. But let's now jump into the Forex market. And we'll start by trying to define our bias. So we'll go and bring this down to 30 minutes. So as we were saying yesterday, this was our level of support. We have now broken through that level of support and we've made a new low. So we're now more convicted with our bias of it going of the US dollar going down. So in essence, that means that our our other pairs matched to the dollar market are going to be going up. But what we do need to see is this pullback. We need to see stochastics come up to here before we jump in a trade. So potentially we're going to see a pullback back to our resistance level now, which was support at 94-ish, before a subsequent move down. So let's now look at our dollar market. So we start with Euro USD. So as you can see, we have made that we have made that new high. So here was the previous high. We've now made a new high, but we need the market to pull back before getting involved with this trade. So potentially, let's fib this move and see if there are any potential entries into this market long. Fibonacci from our low here to our high, which is here. So horizontal. Now we could expect a pullback to here, 38.2, but all of our average lines are down here, and DP's here. So if we do get this pullback today, and it looks like this potentially could be the top, but you know, price could just continue going up, and we won't get price into this market. But our best risk reward is to wait for the market to pull back and then try and get this uptrend up to 715. But I would around about here, 1660. So we'll put our trade on order rate 1660. Change this to 400 and $50. Stop loss amount $50. And what I want to see is where our 1% is. So if it would go down to 1.1631, 1.1631, which is around about here. So way below the MAs and DP. So our stop will be protected by our indicators and support lines. So potentially, if price does come back, pull back, we may see price pull back to our average lines, which potentially will be around here before a move or a continued move north. So that's that, and then we'll set our target at 3%, but it needs to be below 11715. So we go 150. Look at the rate. 11747 is too high, so we'll change this to 11710, which is around about here. The reason why we want to get out of this trade before the market gets out of here is because we don't know if when it gets to this resistance line, we may see the market sell off from here, because in essence we would have a double top. Price would have failed to make a new high, and then continue to go down. So anything could happen at this point. We could carry on going up, or we could reverse and go down. So I want to be out of the market at this point. And if we get in at here and get out at 1710, we still make a decent $85, which is near enough 2%. So I'm happy with that risk reward if the market does play out like this. So let's set this order. So that's Euro USD. Let's go back. GBP USD. Now we're not seeing the same type of uptrend in the GBP USD as we're seeing in the Euro USD. Although this market potentially will continue to go up, there's not much room until the next high. This is the height of the market, or the recent market. The next new high is potentially here. But stochastics doesn't look good. Potentially we're going to see this pullback first, back down to DP. But yeah, this chart doesn't look like as an opportunity to make a high or low risk, high reward trade. So this market is dismissed. Let's look at AUD USD. Now looking from left to right, this market seems to be going sideways. It's not really respecting our MAs, and as you can see, it's breaking through it here, then breaking through it here, then breaking through it here, then breaking through it here. It's not really holding up anywhere. Thus, this is not a very good chart to trade on. Chart dismissed. NZ USD chart. Similar scenario here, but we would be getting in. We would be getting in potentially down here, and it will be lower than or below our moving average lines, and we'll be trading into the 100-day, into the 50-day, into the 10-day, into DP, which is not great. You don't want to be trading into your resistance lines. You want to be trading away from your resistance lines. So again, chart dismissed. Let's look at our USD JPY market. A little bit more promising. We're seeing this pullback on USD JPY, but this market is supposed to be going down because we're USD JPY, so it'd be similar to the US dollar market. It's already made that pullback, but again we'll be trading into our moving averages and DP. We can only really trade this market as a break of as a break of DP, and then potentially down to this next level of support. Let's move this down here. Take away this Fibonacci and refib this move. So if we go from high to low, left to right, we're seeing the pullback went up to 58% fib. 50% fib before the reversal, coming down. But you know, I don't really want to get teased into this market short, although we have seen a cross and the pullback. But the average lines, or the MAs, are in the wrong place for us to put on a trade. We need to be trading in essence as a break of DP, so we could trade here. But basically we want this market to show its hand a little bit, and we don't want to put too much risk on the table, especially if we get this break of DP and it's not aggressive, because what we expect to see is that Obviously, all the traders that are trading this market are looking at the same chart that we are. They've seen this move. They're thinking they might get in as a break of DP around 110.20, 110.30, 110.30, and then there'll be lots of orders in this area. So when price comes into this area and breaks DP, it will start triggering all of these sell orders that were placed in the morning and push this market down even further. Now what we want to see is, before we get involved, is a break of this support line at 110. So in essence, we go 110 flat, would then set an alert for 110 flat, so that we would come back and look at this chart once we are here at 110. And then what we're looking for is the pullback back to DP, and then trade it further down to its lows, which potentially could be either here or even down here, which would then give us a really good risk reward trade. But at the moment, we are just waiting for this market to break down. So we'll set an alert for 110 flat, so we can come back and look at this market if price does reach that level. So we go back, USD JPY, set an alert. Done. So let's look at our other JPY. AUD, JPY. Again, here's DP. And it's going down. I mean, this could be a good trade. Now, we're below DP, we're below our MAs. Well, we all agree that the JPY market is going up, and we've got this level of margin, which potentially could get us 3% if we trade at market today. Generally, I don't like to trade at market, but because of where we are, I think I'm going to jump in and place a trade here. We only need to get our stop above 81.70 to make this a really good trade. So let's put this on. We're going to sell at market, so we're trading, and with $50, and then we change the leverage. We have to leverage first. Always make that mistake. $50. Then we were going to set this level at 81.60. So 81.70, just a little bit more. So there we've got 36 is our stop. And then we can go all the way down to 81.03. 81.03, which gives us a really good risk reward, at least 5% here. Let me see. 1, 2, 2 is changing as we speak. 0.6 divided by 41.50. Nearly 3%, 2.94%. So in essence, we're trading this market down to S1. So generally, we see these trends. Market breaks down past the support line. Look, if we look here, it broke this, went up to the next resistance line before coming down again. What we want to see is the same in reverse. We break DP, we go down to S1 before a pullback. And as you can see, stochastics is coming over to overbought. which means this market is potentially going to move downwards with the rest of the trend. Remember, correlation is key. We need the rest of the market to agree with our bias. To agree with our bias, so that we can see that the rest of the market is going in this direction. I mean, based on what we've seen so far, it does look that way. But let's go and have a look at another JP market to make sure that the JP is going up against all currencies. So with AUD JPY, so Euro JPY, we want to see the similar pattern in this market. So as you can see, this market is going to head down potentially to DP, but we may get stopped in this particular market by the MAs and DP. But in essence, the market is going to move down. I mean, we've seen it come up to R1 and it's stopped here, couldn't get past, again couldn't get past, third time potentially couldn't get past. So we're going to see the same sell-off that we saw last time it came up here and come down to here, as we're going to see here and come down to here. Potentially previous performance isn't indicative of future performance, but it generally gives us a rough idea of how price is going to move coming forward. But what we're looking for is a directional bias, that this is the chart is moving in the same direction as the trade that we've placed. Now, we're not going to place a trade on this market because it's not an opportune time to trade. We would be trading into our MAs and DP, which is against our principles. We need to be on the other side of this market to go short. The only option in this market is to go long and wait for the pullback into our average lines before a subsequent trend upwards. But that goes against our current trade. Now, we have to keep an eye on Euro JPY when it gets down to 128.90, because a break of 128.90 may mean that this market may reverse, and we need to start look at our positions to make sure that we either come out the trade, or we need to come out the trade because we're not sure where the market's going to go from here. So I'm going to set alert on Euro JPY for 128.90. Euro JPY 128.90. So we just look at one more chart just to see if we can get this directional bias under control. As you can see, it looks exactly the same as the Euro JPY, and market is potentially going to move down in similar ways as our current traded market. So we can see we're up here right at R1 and DP's down here. Intermediate support is here. So potentially we're going to see a sell-off in this market down to here or here before some sort of reversal. As you can see, stochastics are as well overbought, so there is a reversal imminent in terms of a trend downwards, which goes with our current bias of how we see the market's going to go today. So that's a look at our charts and the analysis. As you can see, we are currently $14 down on our AUD JPY trade, but that's because we traded it at market. We kind of missed the uptrend, and we're trading it down here because we could have caught it just here. But you know, I'm happy with our position here on AUD JPY. And we should see potential downside coming down here and not a break of 81.70. I mean, if we do see a break of 81.70, that does mean that my my initial analysis is wrong, and I should be out of the trade. If the price goes up here, I should be out of the trade. And that's the point of having a stop loss, because the stop loss, if hit, should invalidate our trading plan, thus means we should be out of the trade. And that's it for today. I've got one trade on the book, hoping for another trade to get triggered later on today, waiting for that pullback and then trade it back the other way. I hope you enjoyed today's video. You've been awesome. I've been Malachi Kelly. Happy trading.